PayPal versus SoFi stock. Which is the better buy? The fintech veteran launched in 1998 and still processes over $1.5 trillion in payments. SoFi, the newcomer, started in 2011 and now a full digital bank with its own charter. So which of the two is the better buy? Let's get into it. First thing I want to do is discuss a little bit about the two companies. PayPal, look at it. It's just fell off a cliff these last 3 years. Obviously, most of that happened in 2022. It was selling for $300 a share and then it dropped all the way to $70. And now it's $77. So it's fallen by a lot these past 5 years. And of course, PayPal makes money by helping people and businesses send and receive money online. Most of its revenue, most of its income comes from fees on transactions. Every time you buy something with PayPal, the seller pays a small cut. It also earns money from currency exchange, lending, and getting interest on the money that it holds. So in short, PayPal is like the toll booth of online payments. It takes a tiny fee every time money moves. Then you got SoFi. It's kind of doing the opposite of PayPal. Look at that. Look at net income. Look at how much net income's increased by, and look at price. It's gone up from $6 to $30 right now. SoFi, it makes money by acting like a digital bank and financial supermarket. Its biggest income comes from lending, especially student loans, personal loans, and home loans. And then of course it earns interest when people pay those loans. And investors see this stock as a high risk, high upside play. So you know me, I want to do a dive into the numbers now. Let's do a full stock report. What we're going to do is we're going to compare them side by side with all of the numbers.
Okay, so PayPal right now has a low P ratio, especially for this type of company. You know, a tech company, online transaction company, you would think it would have a higher P ratio, but no, it's only got a P ratio of 14. Compare that to SoFi, P ratio of 64.
You know, when we see the price having increased for SoFi and the price decreased for PayPal, everyone thinks, oh, let's buy SoFi. Look how well it's doing. While you're paying a P ratio of 64 times. Price to sales of 11.9. PayPal's price to sales is only 2.1. So all up, the market cap for PayPal is 70 billion. For SoFi, you're talking 34 billion. Earnings, 561 million. But PayPal earn 4.7 billion. So PayPal are double the price, like double the market cap, but they earn way more than double earnings. Revenue 32 billion and SoFi revenue is only 3 billion. So if you're comparing market cap to earnings, market cap to revenue, PayPal's the clear winner here. But if we look at the fundamentals, it's going to give you an understanding and an idea why you're paying such a high price for SoFi stock relative to earnings, relative to revenue. So this is PayPal right now. PayPal, they've grown well. Revenue, they've grown really well. So 8 years ago, 7 years ago, it was $13 billion in sales, and now it's 31 billion.
7 years ago, it was 1.8 billion in earnings. Now it's $4 billion. Bit of a problem though is the last couple of years they've been doing kind of average in profit. Nevertheless, the shareholders will be quite happy with the revenue figure. You're good. Revenue and sales is the same thing, just different name.
You know, it's going up. Each year it seems to be going up. So that's positive that the revenue's going up. It's just that profit, it's a bit iffy. SoFi, and look, their revenue is going up by way more. 2018, they made 270 million in sales, and 2024, the latest financial year, they made 2.8 billion. Net income, they were negative. They were like Amazon, minus 250 million. Now they've gotten to the positives. Now they're making great positive money, and maybe they've only just started 500 million. So in terms of growth of sales, SoFi is winning. Graph here will give you an even better analysis why. Annual earnings growth was 3.7%. The market was 10.6%. The industry was 12.3%. So they've really struggled to grow their earnings. Then we take a look at SoFi. Past 5 years, annual earnings growth was 48%. Compare that to the industry of 3.9% compared to the market of 10.6%. So SoFi are just dominating in terms of earnings growth and revenue growth too.
Another thing that's important to look at is the debt to equity ratio, and this is simply Wall Street, by the way. I'm using simply Wall Street. You can subscribe to them if you want. They're not a sponsor, but I just like the platform. So this is the debt to equity ratio of PayPal. And right now they have a debt to equity ratio of 56%. Normally you want that, 50% or below is considered healthy, but 56% is okay. And they've kind of hovered around that for a while. Obviously, a few years ago it was a lot better, but since 2018 they did start to take on more debt, but it still seems like it's manageable. Then you look at SoFi, and that kind of the opposite. They've grown in the equity. In debt, they've been minimizing. So like 5 years ago, they had debt to equity ratio of 230%. They had hardly any equity compared to their debt. And now it's 58%, so it's more than manageable. You don't want to be buying a company with a highly risky balance sheet. That just adds more risk to the investment.
Okay, another important factor to look at is management. Who are the people that are actually managing the business? So right now, PayPal's CEO is Alex Chris. He was appointed in 2023, so he's relatively new. He's only been here for 2 years.
Ideally, you want Buffett, who manages the business for 40 to 50 years. He loves what he does, and he keeps doing it, keeps growing the company. That's in an ideal world.
But also another thing to look at is the board, because the board control the management, and the board have been there for, 7.5 years, which is a decent amount of time. SoFi, their CEO, Anthony Noto, he was appointed in March 2018, so he's been there for 7.5 years. So that's a lot longer than PayPal's CEO, and their board tenure has been there for 5 years. So good enough, 5 years is a decent amount of time. So on this metric, SoFi wins. Another thing that I like to look at is ownership.
The ownership setting part of these companies. So right now, if we look at insider trading, actually you've got a bunch of insiders who are selling PayPal stock. If you look at SoFi, on the other hand, no one's doing anything at all. None of the insiders are doing anything.
0, 0, 0. Apart from the past 9 to 12 months, it was about the same sold. Individual insiders, PayPal, this is a very interesting one. I really like this statistic. It's even better for companies outside of America, because then you really get a feel for the company. A lot of companies outside of America and the smaller ones have really strong individual insiders, which I like, a really high amount. This is PayPal. Individual insiders are 0.1%, so you can't even see the slither there. It's so tiny. So they have no insiders buying PayPal stock at all, which is a little bit telling. Also, the larger company gets, the less individual insider.
But still, that's nothing at all.
Look at SoFi, they win on this metric. They have 1.65% of individual insiders, so at least they have something. At least you can see the graph there. So that's just another statistic to take into account. And of course, when you look at the top shareholders, there's no surprises. It's the Vanguard Group, it's the BlackRock, it's the State Streets. It's the same for PayPal. Obviously, PayPal has that, but SoFi has it too. Vanguard, BlackRock, State Street, all the big names, UBS are the biggest shareholders. In terms of number of employees, PayPal are actually dropping their employee count. Obviously, in 2021, everything was going all well, and then things started to go down. People were more worried about a recession, so the likes of Meta and other companies and the big companies dropped their employee count.
SoFi, it's different, I believe. They're actually growing their employee accounts. So just another metric to take into account.